Today, let's discuss the case study of a client relocation from US to India. The case study is real, but let's change the name of the client. Let's call him Rajiv. So Rajiv, who was a US citizen, moved to India after spending nearly 20 years in the United States. He relocated with his wife and 2 teenage children. Rajiv had never lived or worked in India before. He had moved to the US for his master's degree and continued working there with Microsoft. His visits to India were just limited to vacations. As a result, he had a very limited understanding of India tax structures. He had made a decision to move to India to be closer to his parents, but he was also scared at the same time. He was full of questions. How does the tax system work in India? What forms am I supposed to receive from the government? How would my US income be taxed in India? And how would my India income be taxed in the US? Since Rajiv did not have the basic knowledge, he was unable to get clarity on making key decisions. He was unsure whether he should sell or rent his property in the US. How should he manage his 401k? Should he withdraw it? Should he just leave it in there? Or should he convert it to Roth IRA? Now, this is how we approached Rajiv's case. First, we started by understanding his financial profile in the US. So before moving, Rajiv had a house property in the US. He had substantial retirement savings in his 401k. He also had brokerage accounts with Fidelity and Vanguard. Now, considering all of this, the first step was building the foundation. In the first session that we had with Rajiv, we focused on educating him about an overview of how the India tax system works. What are the different residential status and how each of these status impacts taxation of global income. We also told him about US and India tax obligations for a US citizen who is living in India. Once the basics were covered, then in the next session, we covered cross-border tax understanding. Here, we covered his US and India filing, understanding concepts such as foreign tax credit, dual taxation, the double taxation agreement between India and US, and how all of this would impact in his particular case. All of this enabled Rajiv to have an understanding of the taxability of each head of income in his case. So for example, he understood how his India salary would be taxed in India and US. He understood how his rental property in the US would be taxed in US and India. And how can he take the benefit of the tax laws and double taxation treaties to minimize his tax impact. We discussed this at length for each head of income. After understanding about taxes, Rajiv was curious to know how to handle his investments. Since by now, Rajiv already had basic knowledge, he was more equipped to understand what are his options for managing his assets in the US. So, what does it mean from a tax perspective if he sells his house versus rents it? What does it mean from a financial outflow perspective to retain his 401k versus withdraw it versus convert it to Roth? He now also understood the pros and cons of each option. We also discussed what are his options for buying any future assets. So, going forward, is he better off buying mutual funds in India or a property in India or just invest it in the US? For this, we also took into consideration his future plans for everything like his kids' education, his own retirement planning, All of this was taken into account. Now, after taxes and investments came the last but a very important part, which is compliance requirements. There are different types of compliances that are required by US as well as India laws. Here, I prepared a compliance checklist for different FEMA and banking compliances. The types of bank accounts that he should have in India and he should not have in India, the rules regarding remittance of foreign funds, etc. A critical part of compliance reporting is also foreign asset reporting. Both US and India laws require you to report your foreign assets depending on your residential status and your account balances. We spoke about what are Rajiv's specific reporting obligations, considering the types of bank accounts as well as assets that he holds both in India and in the US, and the different types of forms that he is required to file. For example, FATCA, FBAR, etc. So in this way, Rajiv was able to get a holistic approach on his financial planning during relocation. So at the end of our engagement, Rajiv received a comprehensive summary of all the discussions with all the pros and cons of each decision. He received a clear action checklist for implementation. He also received a detailed calculation of his India residential status so that he could time and plan his India move accordingly. Our goal here was not to make Rajiv a tax expert. However, you need to understand that tax rules, especially cross-border tax rules, are complicated, and in order to have clarity and peace of mind, it is essential to understand the rules that apply to you. So, by the end of this process, Rajiv clearly understood the tax implications of every major decision. He was confident about managing his cross-border compliances. He could make informed investment decisions. That, in my opinion, is the goal of the service that we offer. That's all from my side about this case study. If you found it interesting, do check out more such videos on our YouTube channel and visit our website at shilpakere.com. Thanks for watching.